Hi, good evening. Today we'll be discussing GST Session 6, Section 17(1) to 4, where goods are used partly for business and partly for personal use. The credit is restricted to business use. In case goods are used partly for zero-rated suppliers or exempt suppliers, the credit is restricted to zero-rated suppliers. Exempt suppliers in 2 would mean goods or services liable to reverse charge, sale of land, sale of building with completion certificate. Section 18 Special Circumstances Merger, Section 19 Job Worker, Section 20 IST, Section 21 Incorrect Credit Recovery for Interest Penalty and Arrears. Example ITC, same in CGST, SGST, IGST, UTGST and compensation cess. Less credit between the for the purpose of compensation cess to be utilized for compensation cess only. Section 16 registered person would be entitled to uh, uh, ca- take, take credit of goods and services, 10 premises in one state, then one registration, one would be principal place of business, 9 would be additional place of business. If one more is added, then one more would have to be taken as additional place of business. Amendment, we do register, we cannot take any ITC if the same is not registered as principal place of business or additional place of business. Amendment to be taken within 30 days. Section 2 ITC means credit of input taken on any goods or services, meaning of capital goods, input services. Example, furniture for office, credit available. Example, mobile for staff or self, credit available. Example, inputs, stationery, paper, telecom, renting, marketing, training, manufacturing requires capital goods, input services. Trader requires capital goods, input services. Section 219 capital goods. The value for which is capitalized in the books of accounts for ITC, which is used for in course or for furtherance of business. Capital goods ITC can be taken for depreciation, can be availed on tax component. Depreciation goods 10 lakhs, GST 1.8 lakhs, total 11.8 lakhs. ITC goods 10 lakhs, GST 1.8 lakhs, total 11.8 lakhs. PNL, if depreciation of on 1.8 lakhs is taken, then tax savings of 1.8 lakhs at the rate of 30%. But if ITC is availed of on 1.8 lakhs, output tax liability 5 lakhs and input tax credit 1.8 lakhs, net payable 3.2 lakhs. Hence, from the above, it is clear that we should always take ITC on capital goods as you get 100% benefits against the output tax liability, whereas you can get 30% benefit if you claim depreciation against GST. In GST, we get 100% benefit in the same year, unlike 50-50% in previous laws. Input section 259. Any goods other than capital goods used intended to be used in course of a furtherance of business. Hence, from the above, we can take credit of indirect inputs as well. Input services, section 260. Any service used by a supplier in course of a furtherance of business. Credit as at direct as well as indirect input services. Any capital goods input services which are used in course or for furtherance of business. Section 17(5) no credit in respect of certain transactions. Motor vehicles except for further supply of vehicle, transportation of passengers, driving schools, transportation of goods. So companies take a car on lease. As on lease, GST at the rate 18% is applicable. As per section 17(5) says, hence it covers purchase as well as leasing. No credit on leasing as well as companies did tax planning. Company purchases 10 purchases vehicle 10 lakhs, GST 2.8 lakhs, uh, total 14.3 lakhs. Leases vehicle to another company, lease 10, GST 1.8 lakhs, total 11.8 lakhs. Hence, output tax liability, other company 1.8 lakhs, input tax credit 4.3 lakhs, 3.5 lakhs. Hence, the company can take refund of 3.5 lakhs under Section 54(3). But in the above notification 11/2017, transfer of any right to use same rate as in case of supply of goods is applicable. Hence, 28% would be applicable on leasing as well. Hence, leasing rate would be 28%. Hence, there would be no benefit on purchasing and then leasing the vehicle to another company. On direct purchase, the rate which is applicable, the same rate would be applicable on leasing. Hence, leasing rate would be 28%. No ITC on motor vehicles in case of insurance, repair and maintenance and services, as per Section 17(5) says, wrongly claimed interest at the rate 18%. uh, Company Hotel Haryana, Company Haryana Hotel Delhi. Company cannot claim credit of 900 hotel charges CGST, SGST, CGST 450, SGST 450. Company cannot claim credit because IGST, if IGST could be charged, then the company could have claimed credit. But the place of supply is the place where the hotel is situated. Hence, the company cannot claim credit of CGST, SGST if it is registered in Haryana. Uh, Example 17(5) outdoor catering canteen cannot claim Section 17(5) office building contractor 2 crore GST rate 18% 36 lakhs cannot claim credit of 36 lakhs as works contract for the supply of works contract except for plant and machinery. If contractors subcontracts, then contractor cannot claim ITC. If in the above company constructs its own building, then on purchase of cement and steel, can we get credit? Section 17(5) says goods and services used for construction of immovable property, then also we cannot claim credit. Hence, on the above, it is clear that cement and steel we cannot claim credit. For repair and maintenance of immovable property, can we claim credit? Repairs 10 lakhs, GST 1.8 lakhs. Section 17(5) says to the extent of capitalization. Hence, if you do not capitalize, then ITC on rent building cannot be claimed. Can you claim ITC on backdated expense? Section 16(4) says registered person would be entitled to claim ITC after the due date of would not be entitled to claim ITC after the due date of furnishing return for the month of September or following the end of the financial year or filing of annual return, whichever is earlier. uh, Section 17(5), if you have lost the goods, then no credit at ITC of ITC. Personal consumption of goods, then also ITC cannot be claimed. Example, residential dwelling. At no GST, then also no GST as it is residential dwelling. Security guards can claim credit. Uh, any fraud or notice, then also you cannot claim credit. Purchase plant and machinery, construction and plant and machinery ITC is allowed. Machinery is fixed structured foundation, hence you can take ITC and cost to be capitalized with the machinery. Renting of immovable property, you cannot claim credit. Section 20 IST, input service distributor. HO Delhi, Factory 1 UP, Factory 2 Bihar, Factory 3 Rajasthan. Goods are provided to factories as GST liability is in factory. HO advertisement 10 lakhs, GST 1.8 lakhs, total 11.8 lakhs. HO cannot distribute credit as uh, uh, capital goods or inputs. It can distribute credit of input services only. In IST, credit of capital goods or inputs cannot be distributed. Only input services can be distributed. And on an IST, RCM can also not be taken at the IST location because it requires the tax invoice, and an RCM tax invoice is not applicable, is not available. Hence, in case of RCM, the credit cannot be distributed in case of IST. Uh, Hence, the credit will be distributed if directly attributable from factory to factory. If indirect, then amongst factories on the basis of turnover. Uh, CGST, CGST or IGST, SGST, SGST or IGST, IGST, IGST or CGST or SGST. ISD needs to have a separate registration and separate returns. Server is HO, cannot distribute as it is capital goods. HO law is service section 9493, tax on RCM. As the RCM tax invoice cannot be distributed as the invoice is said. RCM credit cannot be distributed. ISD concept is not flourishing in the market as it cannot distribute credit of capital goods, inputs, and RCM. For taking the above, HO should take normal registration. Then HO will be able to take the entire credit. HO can have both normal registration and ISD registration. No, HO can have either normal registration or ISD registration. This brings us to the end of the session. Please do like, subscribe the channel. Thank you so much.